I've been here in Chicago at the Morningstar Investment Conference for the past couple of days talking to multi-billion-dollar money managers, and I am happy to be joined by another Jim Moffett, Chief International Strategist at Scout. He runs the $8.5 billion Scout International Fund, which has outperformed 89% of its peers over the past 5 years. Jim, a pleasure to have you here in the Inside Track. One of the things that interests me most about your fund is the fact that you're an international equity manager who owns no Chinese stocks. Right. Why?
Well, we have a strange attitude about wanting a country that has a rule of law and property rights and contract rights and things, and we're just spooked by it. Now, we recognize that China's one of the drivers in the worldwide economy. In the last few years, we've looked at it as kind of a bipolar world where, you know, we buy it and they make it. And then as we went into recession, they've been putting the growth into the worldwide economy. We think that not a policy issue, but we think that that's in a process of kind of rolling over and slowing down.
Okay, well, you raised two important points. Let's tackle the first, because I think it's one of the more fascinating questions that confronts people who might or might not invest in China. Do you want to impose American values on a Chinese system? It's an important issue for people at the State Department, but you just raised a point that makes it sound as though it's an issue for a money manager too. Is that because you feel that without rule of law, without fair access to capital markets, that ultimately the Chinese economic miracle is going to start breaking down?
Well, we think there's some risks in there, both in terms of the macro China picture and in terms of individual companies, that where the risk is that the government's going to tell them to go do something that's in the government's interest, or there are questions that have come up on some of the accounting issues on some of the companies, and
yes, as of late, very much so, right? Sinofor is just one of them.
And we as outside investors don't have any leverage on that situation.
I see. Now, how about the macro picture in China? Do you think that maybe people are ignoring some of the signs there as well? We know that China has inflation, and it's been struggling to keep it under wraps, raising bank reserve requirements, raising interest rates. You know, are we, in your opinion, facing a near-term future where the rubber, so to speak, meets the road on that front?
It's possible. I mean, we see a slowdown, if nothing else, and they're trying to engineer the proverbial soft landing, and those things are rarely done successfully.
Even in a centrally planned economy.
Even in a centrally planned economy. And there are pressures and stuff that build up in a centrally planned economy that, because it's done from the top and it doesn't respond to the market.
All the way down to the bottom.
All the way down to the bottom, that you wind up getting some misallocation of resources.
How about the rest of the BRICS? Brazil, Russia, India?
Well, we put Russia about 3 pegs below China. Okay. I mean, the Chinese, in a sense, will steal your technology. The Russians will steal the whole company. Brazil and Russia, Brazil and India, we have some exposure to, particularly Brazil, and we'd like that. But we've been cutting back there a little bit because China's Brazil's biggest customer. They buy most of what Brazil exports: soybeans, iron ore, things like that. And if China slows down, the guys supplying it are going to be the ones coming up short. And somewhere buried in there may be an inventory cycle that right now, I mean, people, you scratch the surface and they build up their inventories of raw materials because the Chinese are going to buy every ton. If the Chinese quit, then commodity prices are pretty sensitive on the margin.
Jim, should this be a macro concern for us? We talk so much about what's happening in Greece, what might happen in Portugal, Ireland, Spain, but the reality is the entire world is counting on emerging markets to carry the day when it comes to GDP growth. Some of the concerns that you just outlined make me wonder if you're confident in that future.
We don't subscribe to it as strong as a lot of people. On the other hand, we think that the growth in the developed world is better than people are giving it credit for. I mean, we're limping along, but we're slowly picking up a little growth. Western Europe is, although you can't just say Western Europe. You've got North and South, and you've got good companies in troubled countries. But overall, the European growth is doing a little better. I mean, particularly Germany and Greece. they just keep kicking the can down the road.
Before we go, I have to ask you about bank stocks, because I mentioned earlier that you're underweight bank stocks, but you still own them. With so many concerns swirling out there around banks, whether it's because of Greece or what's happening here in the United States, why would you want to hold them?
Well, there are good banks around the world. And if you look at the list of our top 10 holdings, a number of them are banks.
Canadian banks, in fact.
Well, and some of them are Canadian, but we also own like UOB and ANZ in the Orient, banks that we consider to be well run. And part of our gun-shy quality in terms of banks in general is it's hard to tell what's going on inside banks. And
black box.
Yeah, they're kind of a black box. And particularly where the New York banks were doing off-balance sheet entities and things like that. And some of it's a difference in regulation. I mean, the Canadians just don't put up some of that baloney. But not even, you know, the much maligned Spaniards. I mean, we have stock in BBVA, and the Spanish banks went to the regulators and say, hey, we'd like to do sieves and conduits. And the regulator said, fine, as long as you put them on your books. Well, the reason to do them is not to have them on your books. So the regulators called their bluff on that.
So you have to be a careful stock picker, in other words.
That's right.
All right, Jim, a pleasure to have you here in the Inside Track. Jim Moffett, he runs the $8.5 billion Scout International Fund.